Welcome to ShortView Trading. It's your morning market hit for Thursday, September the 17th. What matters today for traders? Well, that was quite something. Markets truly fitted the pattern anticipated over the course of this week, rallying into the Fed, rallying into the dovish statement, and then selling off pretty much around the time of the Q&A and the announcement. And of course, they didn't sell off because the Fed wasn't dovish enough. If you looked at the detail of the economic projections from the Fed, or listened to the tone from Jerome Powell, it was super dovish. No two ways about it. And of course, as I say, you can see that in their economic projections they put out once a quarter, where they ask all the Fed governors to give their projections of where they see interest rates, inflation, GDP and unemployment going over the next few years out to 2023. If you look at their expectations for inflation using core PCE deflator, that's the Fed's preferred measure of where inflation is, you can see that on their projections it only just makes 2% by 2023. And of course you'll recall that back in August at that famous Jackson Hole speech that Jerome Powell gave, he changed the monetary policy target to an average of 2%. So the Fed's own projections only just make 2%, never mind going above it, by 2023. And that is despite interest rates in their own projections remaining on the floor at the low levels that they're at the moment, all the way out to that time. So in other words, the Fed's going to leave rates on the floor until 2023 and only just make its inflation target at that time. That's a very dovish statement. All of that, of course, confirms the dovish, uber dovish message that's coming out of the Fed at the moment. But as I say, despite that dovishness, the market still sold off because it anticipated that news flow. It anticipated that tone. And it was buy the rumor, sell the fact. Markets, of course, are forward-looking beasts, and that's exactly what they've been doing throughout this week. So the key question is where now? And of course, you've seen the charts in front of you now. The S&P sold off, as I said, into the close and overnight, and now looks as though it's heading back to key support levels where big questions will be asked. For the S&P 500, that key support is the intraday lows we saw last week on the 9th and 11th of September, around 3,300 level. And for the Nasdaq 100, it's a similar sort of pattern, with last week's intraday lows at around 11,000, the obvious next key support level. So markets are in a near-term downdraft, whether that's a day or two, who knows. Then they'll be asking key questions, and we'll be back to the key question we posed yesterday. Is this a three-wave sell-off, or is that one and done with the wave we had last week, and markets therefore finding support over the course of coming trading sessions at those intraday lows from last week that I just highlighted on the S&P and the Nasdaq 100. So that's the key question. To see how we're playing this market, please see today's Daily Rag, available to subscribers via the website. What are we watching today? Well, there's plenty of macro out today, quite important data points as well. It's Thursday, so we've got the weekly jobless claims. Of course, they've been watched very closely over recent weeks. But added to that, we've got more data on US housing, where we've seen considerable strength over recent months. Earlier this week, we saw that with the NAHB Housing Market Index. Today, we've got housing starts and permits, so more information on the housing cycle. And over and above that, we've got the Philly Fed Business Survey, always interesting. Elsewhere, central banks, Bank of England today, nothing expected, but of course anything in their minutes that suggests where their tone is going and where their thinking's going will be closely watched as well. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.